man, so Bitcoin opens up the week in the green, up 1.76%. But in this video, I need to share with you a huge warning because you could be running straight into a bull trap. So we're going to cover off the key levels, loads going on in terms of the FX markets, dragging the markets down. I'm going to explain to you exactly what is going on there. We're also going to get the update on Lunar Classic, which is an interesting update, plus so much more. Smash the likes. Don't forget to subscribe. As always, check out the links in the description if you want to buy any crypto. As you can see here on the 4-hourly chart, Bitcoin is trying to break out from this triangle pattern. We've been monitoring this symmetrical triangle type pattern. Very volatile. You can see the types of candles we've had leading up to here. Big wicks on all these candles. And now you can see it's trying to break out above this 19,200 level. Are we going to get a move up towards 20,000 at the top of the wedge? Potentially. But I need to also show you what is going on in terms of the slightly longer term picture so we do not get caught out. Now, initially, what is going on? Let's remind ourselves of the key drivers here in the market. And we know that the dollar index has been showing some immense support here. Look how strength here. Look how it's extended here from the EMA ribbon on the 4-hourly, and do not be surprised, as I said here, to see a cooling off into the 4-hourly EMA ribbon. Remember, this is inversely correlated to Bitcoin. So if this decides to go for a cooling off period, that means Bitcoin can rally like we're seeing right now. But please do understand, where is the majority of the trend? The majority of the trend lays with the dollar index. Dollar continues to be showing strength. Now, why is the dollar index showing great strength? Well, we've covered this off on Friday. Big, huge dumps to the downside, which have continued here on Monday, with the euro falling here to the downside, as well as the GBP versus the US dollar. So similarly to how I was saying the dollar index was trying to correct down to its EMA ribbon, do not be surprised to see that these currencies, GBP and euro, come to test its EMA. But again, what's their trend? They're in the downward trend, okay? So we have to keep the bias. That dollar index is showing strength. That's going to keep markets risk off, and that will give us a bit of caution to say, let's not chase these green candles. And that's my message today. I am not chasing these green candles. You can see what we're trying to do is we're trying to get through to our EMA ribbon, and it would be great if we can close above our 4-hourly EMA ribbon. But if I flip this over to the daily chart, you can see we are very extended from our EMA ribbon. So do not be surprised to see if we do indeed get a move up to 20,000. That would bring you into your EMA ribbon. But even then, I do not want you guys to get caught out on the trend. Even if we get a break of trend and you want to trade this up to 20,000, that's absolutely fine. But you need to be taking profits quickly and efficiently, because you are running into your daily EMA ribbon. Let me just remind you again of what I'm saying. If you want to trade this 4-hourly, let me just bring this very clear. If you want to trade this 4-hourly move, let's remove this EMA ribbon here. If you want to trade this breakout up towards the top of the channel, that's fine. You guys can do that. There's no reason why you couldn't get a move here up to 20,000. But when we zoom out onto the daily, just remember, bringing out the EMA ribbon, even that move up to 20 just brings you into the halfway stage of your EMA. So the bears could step back in and push us for our next leg to the downside. So we continue to remain with the bias for the bears. Yes, we could have a short-term pump as the dollar index cools off. I mean, you can't expect the euro and the GBP keep tanking consecutively. They're both coming to critical support levels, and that could mean we could start getting a cooling off period here on the dollar index, which could mean a slight pump here for Bitcoin. But overall, is this a longer term pump? Not quite. We need to hold fire for that. We still have a global slowdown, and that's what's weighing on the markets. If you take a look at the US markets, you can see the Dow Jones is opening up flat in the red direction. S&P is completely flat, and the Nasdaq is trying to rally somewhat, 0.66% up, as you can see, because the dollar index is trying to call off a little bit there. So loads going on in terms of the macro space. We've got some important updates coming this week as well. We've got a Fed official pretty much speaking every single day. I wish they would shut up. More importantly, you've got Jerome Powell on Wednesday. Again, I wish he would shut up too, to be honest. Hopefully nothing comes of those. You've got a Q2 GDP revised figure coming out on Thursday. You've got your Michigan consumer sentiment on Friday, plus your PCE inflation figure coming out on Friday as well. So a lot to look out for. We'll need to keep an eye out on that as well. A few other things I do want to share with you. Let's start off with Bank of America saying that cryptocurrencies continue to act as risk assets. Oh my God. Thank you so much, Bank of America, for clarifying this. I mean, we want to know, right? I mean, we weren't talking about it for the last 10 months for no reason, right? But it's great. Thank you, Bank of America, for giving us such timely information. Really, really appreciate that. More importantly, Interpol issues red notice for Do Kwon. Yep, Do Kwon is still not working with the authorities, and now they're trying to find his whereabouts with a red notice from Interpol. So things not looking great here for Mr. Do Kwon, CZ announced that they are going to implement the Lunar Classic burn. Okay, so they're going ahead and they're implementing the burn. But what's interesting, he did mention there were 3 things that the Lunar community were not happy with this approach. It's going to take a while to develop. It's not going to work anyway. Our traders won't vote for it. So what he did say he's going to do instead, we have decided to begin burning all trading fees collected on the Lunacy BUSD and LUNC USDT spot and margin trading pairs. These will be converted to Lunar Classic, then sent to the burn address. The burn is paid at our expense, not the users. Okay, so that's interesting from Binance. Big move by CZ, obviously trying to win the hearts and minds of the Lunar Classic community to keep trading volumes high. He's saying they will pay from their fees, which is very, very interesting. Now, based on that news, we are seeing Lunar Classic here move to the upside. Let's see if I can pull up that chart. As you can see, up 58% here on Lunar Classic. Another big move. Again, if you're playing this move, guys, feel free to play it. It's a momentum-based trade. Understand that this is based on the social hype. There's not much that technical analysis can do for you. There's not much that fundamental analysis can do for you. If you're playing the hype, if you're playing the momentum, then by all means trade safely with a stop loss, with what you're willing to lose, and all those safeguards in play. Don't let anybody tell you that you can't enjoy that. You can enjoy it, but as long as you're doing so from a position of strength and not doing so with your life savings, that's all that anybody could really advise you to do. Okay, a few other things we do want to take a look at is this. Let's look at the percentage drawdown from previous all-time highs. And as you can see, this is a message I've been saying quite a lot when we're looking at the on-chain metrics. A lot of people, including myself, have said, look, we've not quite reached the same percentage drawdown from the previous bear markets. But the evidence also shows if you were to connect these points, right, from the bear markets here and here and here, you can see that there's an upward trend. In other words, as crypto matures, the percentage drawdown from previous all-time high doesn't need to be as big. This is one of the arguments that we are getting closer and closer to this bottom. We don't necessarily have to come down to these percents down here. We could be forming this bottom pattern now, spending some time here, and then trying to reverse our way out. That is what the argument is right now. Also, it's always fun to look at this, and this is your 4-year average on Bitcoin. And this is just a reminder for everybody that if you've been holding Bitcoin for any serious length of time here, you're doing just fine. So it's easy to get caught up in the noise. It's easy for us to look at the 5-minute charts on crypto, but sometimes you just need to look out, smooth the line, and say, if I was investing in Bitcoin over the last 4 years, I would have done pretty well. And that's always a nice reminder, particularly when this, like I was just showing you, is the performance of your British pound where I live. This is your performance of the euro where you guys live as well, if you're in the eurozone as well. So extremely painful to be in fiat currencies right now, and definitely Bitcoin has provided itself as the long-term solution. Another thing I wanted to share with you guys was, let's take a look here at the number of addresses sending to exchanges. And what we're noticing here, just below here, you can see we're falling to super lows here in terms of the number of addresses sending Bitcoin to exchanges. In other words, people are holding on to them right now. They're sitting on cold storage. They're not on exchanges, and people are just looking to ride this out, wait a couple of years or 18 months, 12 months, who knows how long before the next run. That's the activity we are seeing on chain. And also, if you take a look at the HODL waves as well, it's also important to remind yourselves that people are hodling. We've had a big drawdown in Bitcoin over the last 6, 7, 8 months, and yet 77% of people continue to hold here, including the longer term cohorts in green as well. So we are seeing good hodling behavior on Bitcoin. Right. So let's come back here into the Bitcoin chart. And what I do want to show you is, let's pull out, let's start off with this one first. And this is the daily chart. Now, as you can see on this daily chart, you can also see this on the weekly chart. The only way we can really get out of this without more pain is to create a double bottom, right? And this is the W pattern we're trying to form. Now, that could also mean we could have one flush down to 17,600 before we do that. That's a low from here. And then start climbing back towards the neckline at $24,500. Now, if that scenario plays out, then you do get a nice W breakout, which can start to bring you back up to the 31,000 level. If I switch this across to the weekly and bring out the EMA ribbon, you can see what that does here. This W pattern is the way we're going to escape from this situation, okay? That's the only way we're going to get out right now. Now, failing that, we will be going and posting new lows below 17,600. That is where my current bias lies. And the reason for that is the macroeconomy has not given us any hope of recovering just yet. I mean, if we remove this EMA ribbon, let's bring out our 200-week basic moving average, which we monitored, and we continue to remain hugely below this. I mean, this is a worry, right? Let's just see if we can see this on this chart. This is a worry because what's happened is this what used to be our support? If you went back in history of Bitcoin, this 200-week simple moving average continued to remain as support. We fell below it. We tried to go back above it. We got shunned back down. We tried to recover with 2 positive weeks here, and then 2 negative weeks followed. So this is not looking great here. And this type of pattern does suggest that we could be looking for another move to the downside, just to go test that 17,600 level to see what the resolve is there. Now, I know a lot of people are calling out for crazy price targets. Some are firing out 10,000, some are firing out 5,000. And look, it's easy to do that. And if they're right, they're going to look amazing, right? I've seen this in traditional finance. People have made a career of just shouting out numbers. So it's really important that you guys who are trying to navigate this space, who are trying to allocate your capital, do so in a very methodical way. Make sure the people you're absorbing content from is a mixed variety of different people giving you different types of content. Make sure you question, are they actually going into the data, or they're just shouting out numbers? Like, it's easy for me to shout out 12,000 just to look good if we do fall down to those levels. But what are the technicals telling me? What are the fundamentals telling me? What are the macroeconomics telling me? When you marry those all up, you've got to come up with a picture. And right now, the technical levels that I'm looking at very pragmatically is that when we come back down here, are these. Okay, we've got the bottom of the channel, as we've always continued to have, at 18,700. That's a key level. If we lose that level, I'm looking at 17,600. That's this yellow line we've got marked here. If we lose that level, 16,240. Let's keep that for now, and then let's reevaluate as and when if we lose these key levels. But one thing is for sure, if you think Bitcoin's just going to halve now from 20,000 to 10 that easily, you're mistaken, because it's not as easy. It's that elastic band analogy I continue to use with my course members to say, look guys, when you pull this elastic band back, the first bit is easy, but each subsequent millimeter becomes harder and harder. And that is the same for the Bitcoin price. Like I've shown you from the on-chain metrics, you've got a lot of people hodling. You've got a lot of people buying cheap Bitcoin, and they're just immediately taking it away from exchanges. So these are not the same people that were buying at 69,000 and then panic selling at 50,000 and 40,000 and 30,000. This is a different breed of people who come in much more optimistically, waiting for the next crypto bull run. They're expecting 100,000 Bitcoin. They're expecting 150,000 Bitcoin. So they've put it away on cold storage. They're not touching it. They're not going to panic sell if it falls to 15. Right? These are people who have bought in at 20. If it fluctuates to 15, they're okay. Most of the people who bought in at 69,000, they've shown that they've capitulated and started selling already. That's happened. That's been and gone. So are we going to get this final little flush out to that 17,600 level, maybe 16,240? And then, more importantly, can the macroeconomy start to recover? Can we see inflation start to come down? Can we see the dollar index start to stabilize and cool off? Can we see euro and GBP start to regain some footing? Can we see inflation in Europe and the UK start to cool down as well? When we can see those things, then we can start thinking about risk turning back on. And when risk turns back on, the NASDAQ will start to rally. We'll see Bitcoin start to rally and money flow into altcoins. So the takeaway from this message is do not chase those green candles we're seeing today. Yes, Bitcoin's up 2% right now while I'm recording, but these are the days we do not chase. Generally, when you've seen these green days, just taking some of the pressure off, it's followed by quite strong red periods thereafter. So sit back, recognize that the bears continue to be in control, and play your positions based on that. Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe if you appreciate this type of content. Let me know in the comments if you want to buy any crypto. BitGet, BYBIT, links in the description. Those are 2 platforms I use, guys. So if you do want to trade, check out those platforms below. Go watch this video here, and I'll see you in the next one.